Alright, what's going on, everyone? Hope everybody's had a good weekend so far. We're back with the weekly update outlook video. We got a lot to cover in today's video, so let's go ahead and get into it. Alright, so for a little bit of an economic recap, if you watched my last video, I was really eager for the NAHB Housing Market Index, just mainly because it was for the most recent month for October. It came out terrible. Actual was 38, forecast was 43. So we see this housing market, even though we see prices going down, we really see not that many people building and buying homes. So we very well could be getting really close to a housing recession. So we had building permits and housing starts come out. Both of them were actually a lot lower than what we expected. And I really suspect this is mainly just because we see that easing in prices. Now, what I really want to pay attention to for this past week is we have jobless claims, right? So continuing jobless claims came in higher than expected. So this is good news. So you want the labor market to ease down, because the more you see the labor market and the economy start slowing down, easing down, you get closer to that recession risk, right? So then that gets closer to the possibility of the Fed pivoting. But you also have to take into effect inflation. So as long as inflation stays broad-based as it is and it's high, you want the labor market to cool down. You want inflation to cool down, which enhances the possibility of the Federal Reserve pivoting a lot sooner than later. Now, we had the initial jobless claims come out about 16,000 lower than forecasted, which still isn't good. We see that labor market, we see it easing off a little bit, because you can see in the continuing jobless claims are higher than expected by 10,000, but you need that labor market to cool down, especially as the economy is so strong right now with the labor market. Now, you see many things slipping, especially in the data that right here, like the CB leading index was lower than forecasted, and as long as you have this bad news for the economy, you're going to continually have this good news for the stock market. Now, here's the economic data outlook for this week. We have CB consumer confidence. This is coming out on Tuesday, I believe. So here's what I expect from these numbers. So CB consumer confidence just means like the overall confidence in the economy in general from multiple aspects, and usually over 50 means that the economy is growing or it's getting stronger. So, of course, the forecast is only 49.2. Last month's was 49.3. I expect it to be pretty close, but remember, if it is below expectations, we very well could continue seeing this bear market rally in the market. I'm really eager to see the GDP growth rate. I mean, the forecast is 2.1%. Last quarter we had the negative 0.2%, so I'm really eager to see those numbers, and I do not think that they're going to be quite that high for 2.1%. And then, of course, on Friday we have core PCE numbers and the Michigan consumer sentiment. So remember, the core PCE numbers are mainly what the Federal Reserve's watching. This is their main inflation indication, just mainly because it doesn't have those volatile prices like fuel, or anything like that. And then, of course, the Michigan consumer sentiment, anything above 50 is very good for the economy as well. And so forecast is 59.8. Last month was 58.6. So I don't think that number will come in higher than expected. So I've been getting a lot of questions, will the bear market rally continue? We saw it pull back a little bit last week, a little bit of choppiness. So I just kind of want to break down what I expect for this week in general. So on Friday afternoon, we had a market on close order at 1.1 billion to the buy side. This is normally a bullish move. MOC orders, you have giant investors, institutions, and stuff. It's mainly used for possibility of a trend reversal in the stock market, or you can see it a lot during earnings. But when you have anything towards like the $1 billion side, you usually need to pay attention to that. So we had a $1.1 billion buy side, so we could see a gap up over the weekend. But the main thing I'm watching for this week is the big tech earnings. So this week, if you don't know, I've said it multiple times, big tech pretty much runs the economy right now. or runs the stock market. So Apple in general makes up 5% of the S&P 500 and 13% of the whole Nasdaq. So if Apple's earnings come out and miss, expect the whole market to take a dip. So we can see on Tuesday we got Microsoft and Google to really start it out, and then we have Visa as well. So pay attention to the Visa. And then on Wednesday we have Meta and Ford, which are the main two ones that I'm watching. And then Thursday we have Shopify, Apple, Amazon, and Intel, and then MasterCard. So expect, I think MasterCard and Visa will mainly hit their earnings, just mainly because we saw in so many in the past months all of this credit, the credit spending is going up. Just people are just putting everything on credit, and they're continually spending, even though inflation continues to be broad-based and rise. But one thing I want to point out for the big tech earnings, I do not expect anything crazy to happen for the earnings per share or revenue or anything for this quarter. I'm more watching towards the fourth quarter and the first quarter of 2023, mainly because inflation and the supply chain and all these problems that we've been having, it can take time to eventually cause problems in the data and everything. So I don't expect anything, but the main thing I will be watching for this earnings season is, especially this week, is the future guidance. So if any of these tech companies, and they cut their future guidance, and we've seen multiple times earnings per share, revenue, they hit, but it's a lot of that future guidance. The stock market, especially towards forward looking, the stock market is not the economy. So if Apple comes out, they hit their earnings per share and their revenue, but their future guidance is they cut it by just a little bit, even just a little of what they're expecting. You could see a dip you could just see the stock market or the stock just sell completely off. So just keep an eye on that. And then also I want to point out macro environment news right now is really, really big. You need to keep up. There's a lot of things you got to keep up with right now, especially in this market environment. But we saw the other day Liz Truss, which is the UK Prime Minister. She only served in office for 6 weeks and she resigned. As soon as she resigned, we saw the S&P 500 drop a couple of points. So like anything like this, just keep an eye on all the news and everything. And then I also want to point out, bad news is good news. So remember, bad news for the economy numbers is good for the stock market. But also remember, this does not include any inflation data like core PCE. It does not include that numbers, just mainly because it directly involves inflation. If inflation continues to go up, we could see the stock market sell off more. And then also the last question I've been getting is, will the Fed pivot come sooner than we think? Well, we've seen a lot of these. We've seen the bond market going down, and we've seen a lot of really warning signs in a lot of the different areas of the economy right now, kind of signaling that we could either be hitting a recession or something is getting kind of close to break. So I want to put this point across. The Federal Reserve is at a point where they can't return. You either need something to break for the Federal Reserve to pivot, or you need inflation to go down substantially. Because I just do not think that the Federal Reserve will pivot anytime soon until something seriously has to give. If you kept up with the Fed minutes from this past month that came out, one of the key things I keep on pointing out is mainly because of what they said. I don't have it word for word verbatim, but I do know that the main thing that they spoke about was they would rather the risk of stopping interest rate hikes right now would be more substantial or more catastrophic to the entire economy in general than if they kept going. So something's going to have to break, or inflation's going to have to come down before they pivot. So I just wanted to make that point across. So just keep up with all of these things that are coming out this week. We have a lot of stuff coming out, economic data, earnings. So let's go ahead and kind of get into some of the technical analysis point of it. All right, so I just kind of want to get a little bit of a technical analysis point of view. And I want to make it very clear, technical analysis is not by itself 100% foolproof. It's just one of those single indicators that you want to use that can help with like support and resistance areas and stuff on where to get a good entry and exit. So I just want to kind of put that point across. Any kind of like big news, like core PCE news, can drive the market either up or down straight through those support and resistance lines that you make. So nothing is foolproof in the market, but if you use all of these indicators together, then they very well could be used all in all. So we saw on S&P 500 here on SPY, we finally broke out above this key resistance we've been riding down. We broke out one time, but we had a fake breakout and then continued to fall back down. So this is very good bullish news. We broke out, and we kind of was testing that line multiple times. Then on Friday, we really broke out very bullish above it. So just keep, as long as we're above this line, I see short-term bullishness. We do have a little bit of a gap fill underneath all the way down to like 357. We also have a gap fill up to the top, but I do not see this gap fill being filled until at least Fed pivot or some big bullish news comes out. Now, I want to point out we have the stock RSI right here. It's overbought on the daily, but you also have this MACD wanting to push up. So I'm very eager to see if, basically based on the news and the earnings this week, do we break down or do we try to kind of cross over on this? So on the actual S&P 500 here, I want to point out we broke out above a lot of these trend lines here on Friday and was very bullish. We kept bouncing here. We weren't breaking down below this original bull flag that we were in, so we finally bounced above it and just completely continued to rip. And again, stock RSI is overbought on this, but we could continue to see some upside here. So do not be surprised if we do gap up on Monday morning in pre-market. But again, I want to point out a lot of these earnings and news is really what's going to drive the market this week. Expect some high volume, high volatility because mainly due to uncertainty in the market. But Apple, we came out with new. We got very close right here to breaking out on the daily bull flag. And that's when Apple got the news that they were going to cut their production already after 2 weeks on the original debut on their iPhone 14 Pro. So then we were all the way up here to 146, 147 range, and at the end of the day we were down to 140. So I thought it was more of a bit of a over exaggeration, mainly because it doesn't change anything, right? So just because the Apple cuts their production does not mean that. I mean, it doesn't really give anything ideas into their earnings report because their earnings report's not going to include this mainly, right? So we saw this bullishness of overreaction bought, and then on Friday we finally broke out of this bull flag. So I want to see if Apple can kind of stay above and confirm this breakout, or if it's a fake out and we kind of go back down into that trend. But again, stock RSI on the daily is overbought. But that MACD is finally starting to try to cross up to the bullishness. So a lot of this week is mainly due to news and earnings season. So it can go either way. So right now I've got long puts. I will average down on those if need be. But I will be riding this trend. If we continue this bullishness, I will ride it. Do not go against the market because that is a way to completely blow an account. No matter whether you think it's asinine or not, just continue to ride with it. So I think we do see more future pain in the market, but it's a good sign to see a little bit of green where we can, right? So that's going to be the main thing of this video. Just keep up with a lot of the news and the earnings reports that come out this week. If you follow my daily updates, I'll include those, and also I'll post them on Twitter. If you like this video, please don't forget to like and subscribe. Just thank everybody, all my subscribers and everything. So everybody just have a good week, and let's make some money.